Hello everybody, Mark Mousseau speaking again. Section 9, Risk Factor. Now, you must be wondering why in the world would a developer talk about the risk involved in buying a real estate, and the risk involved in buying real estate in Louisiana, and tax and conflict of interest and all that. Why would a developer even bring this up? Well, Anand and myself are very ethical. And when we looked at this investment and these opportunities, what we both agreed to and said is that we want to be able to be in front of any one of you and hold our head up and not have any shame in saying, well, yeah, we didn't tell you this because, oh, well, now we have to justify it. So what we've done is we've compiled a list of risk factors that we want to make sure that you understand them. Do we believe that they're relevant to the investment? For some of you, yes. For some of you, absolutely not. But it is a matter of you viewing and knowing what you're getting into, and that's what we want to do right here. So let me go through a few of these risks, and I'll tell you my thoughts and what you should look into and make the decision based on that. So here we go. So first of all, one of the things that you need to know is that you are buying a condominium unit. So you own title to this unit. You're not buying into an LLC. You're not buying into a limited partnership. You will own your unit. So technically, at all time, you're able to sell it. Now, we all understand sales, and we all understand if the market is great, my unit will sell at a profit. If the market is down, it will sell lower than expected. Okay? So real estate is the same. So the first thing is that certain conditions must be met in order for you to sell your property. There must be demand on the units. We believe that there will be demand. Our technical analysis of it is saying, hey, there's going to be 25, 30,000 new jobs in that area, and there is nothing available at this time. Okay, so market strength is important. And you also have to look at, how long will it take to sell? Real estate is normally not something that sells overnight. I mean, we know some market, Toronto, Vancouver, where you put the unit on for sale Saturday, and on Sunday morning you get 10 offers. Well, that may be good in Toronto and in Vancouver, but it is not the reality, and you should not expect that if you are investing in Lake Charles. This will be a normal market, maybe 30, 60, 90 days of sale, okay? So that's that. And you have to really look at this property based on its merit as an investment. Okay, so let me go through this. Tax matters. First of all, there has been no advance ruling to say if this yes or no investment property is tax deductible. Okay, so I mean, I'm not saying BDO confirmed that the interest on any money borrowed to generate income is tax deductible. We didn't get that. Why? Because myself as an investor knows very well that it is. Now, if you're questioning it, debating it, this is where we recommend you to speak to your accountant. Okay, so Bridgeport did not get a tax ruling for the investor. It's recommending that you talk to your consultants. You have to look at this property as an investment. It is not a short-term investment, it is a medium-term investment. We don't want you to get in there without understanding that you are buying real estate, you want to get cash flow, which you will get. The property will appreciate over time. You will be able to sell it. But look at it as an investment. This is not a get-rich-quick scheme. Okay? We've made some projection. We're telling you that we expect the property will go up by 3%. We expect your cash flow to be X. You will have a lease signed with us in the amount of Y. Your condo fees will be maximized. So we're trying to limit as much as possible your risk, but it is still an investment. If you're not willing to invest, and if you're not going to be able to sleep at night, please then don't invest in our project. Okay, I do not want to sell investment properties to investors that will have blank nights, not be able to sleep. Now, here's something that most people would not say, conflict of interest. Well, we're the developers, we're the salespeople, we prepare the projections, and so basically you are relying on us. You're relying on my 30 years of experience, on and on's analysis of the market, on our projections, on what we see as being what we believe will happen. We will still own close to, I think, $40 million in mortgages on this project. We will still own in the Lake Charles area close to 2,000 of our 2,000 units of ours for our own investment, and we will have invested close to $300 million in total in Lake Charles. So believe me, we know and we believe that Lake Charles will be a place to invest. So these projections are based by the developer, are prepared by the developer based on our own experience. Now, risk inherent to real estate building. What do we mean by this? Well, when you buy any real estate investment property, you really don't know if it's going to sell when you want to sell it. You also don't know in 5 years from now if the lender will say, okay, I'll renew for another 5 years. There's things that you don't know, but they're the same anywhere on any type of investment in North America and the United States. There's no guarantee that the price will increase. What you've got, though, is you've got a rental income that will at least cover your expenses and put you in a positive cash flow. So that's something that you need to look at, okay? Well, the nature of business. Well, the nature of business is very simple, okay? It's buying a condominium unit in a real estate project in a town that is growing, where income is going up for everybody. It's doubling, basically, the income. So the nature of the business is buying at least in a place where there is potential. I'm going to name a town, okay, Hamilton, Ontario. Well, 15 years ago, it was time to buy in Hamilton, Ontario. You could get two-bedroom units, condo units. You could get 12 plexes out there for $30,000, $40,000 a door. The income was on the upswing, but nobody wanted to buy in Hamilton. Why? Because it was a manufacturing town, basically. Well, now everybody's flocking to Hamilton, and they're paying prices that absolutely make no sense, and they don't cash flow. So, you know, like if you look at, as a Toronto resident, and say, I'm going to go buy in Hamilton, you're making a mistake as far as I know. You should have bought 15 years ago, and this is what you have the opportunity to do right now in Lake Charles. So that's one. The risk of leverage. Well, we all know that real estate is a leverage type of investment. It's not as leverage as other ones, but it's still leverage. And the reality of it is that you're putting 30% down, and a bank is financing, a bank, and Bridgeport in this case, is actually financing the rest of your transaction. So somebody could say, listen, I'm going to buy 5 properties because I could leverage it. Well, it's great when the market goes up. It's also risky when the market goes down. Okay, so you've got to think of the leverage position that you are taking. How leveraged do you want to be? The liability. Well, the liability, personal liability. First of all, the unit will be held in a U.S. limited liability corporation, which basically says what it is. It is limiting the liability to the asset. The bank is actually lending 60% of the appraised fair market value at the time that the property is leased. So, you know, what's your real risk out there? If you're putting 30% and we are putting the other 10% as a second mortgage, your real risk is the down payment that you've put in. Do we agree? That's the risk, because anyway, technically, tomorrow, anybody could resell that property at 40% below market. We agree on that. So I believe that the way we structured your deal is there to maximize or minimize your risk, I should say so. The other aspect here is the limited management rights. Well, what you need to know is that the lender that is, and that is true on any investment property, the first mortgagee has the ultimate rights to vote on your behalf on condominium affairs and management affairs of your unit. So we have to tell you that. So, and that's the reality. The second thing is that the bank that is lending wants us to pay directly the mortgage. Why? It's because they say, hey, Mark, you're collecting the money, therefore you pay us. We don't want the money to go to Canada and then come back to us and wait for payment. So we're going to be actually, as part of our management contract, we're going to be making the mortgage payment to the financial institution. So they want to have these rights, okay? So that's that for that. Okay, termination. One of the good things about the fact that you actually own the unit is that you could at any time cancel this transaction. So in 6 months from now, in 2 years from now, in 2.5 years from now, if you want to sell your condo and get out of it for whatever reason, you notify us based on the terms of our contract, and if I ain't mistaken, I think it's a 90-day notice that you want to pull out of the rental agreement and so on. You will pull out of the pooling, you'll pull out of the rental agreement, and you will be able to control your property 100%. So there's no you're tied to us for 5 years. We're offering you these services if you want to use us, but you'll see that it's much easier for you to pool your revenues, pool your expenses, and have one property management to manage the unit instead of having multiple companies. The last thing that I want to talk about is computation of income or loss for the purchaser. Well, effectively, we will be doing the numbers for you. BDO will actually prepare those income and expense statement. The letter will come from there confirming that we have collected X number of dollars in rent and that the expense on the property were, and that we have deposited XYZ into your US bank account that you will be able to withdraw at any time from, or transfer that money from United States to Canada. So in a nutshell, I believe that these are your risks. They're there for you to consider. But what we did as a company in ensuring that you would have a 5-year lease with no vacancy is something that limits that risk. Not guaranteeing, but making sure that the condo fees do not go over XYZ dollars also limits your risk. And the rest is for you to decide what you want to do. So with all of this said, I want to wish you a good afternoon or a good day. And if you have any question, again, please feel free to send us an email, drop us an email. Myself or Anand will definitely answer, or part of our people from our staff will answer your questions. Have a great day. In the meanwhile, talk to you soon. Mark Mousseau, and I'm signing off on this module. Thank you.